Ethereum. Yeah. Let's talk about Ethereum. Let's talk about crypto. Let's talk about Ethereum. Let's chill the music for a bit. The party comes in your head. Okay, so what have we got? Ethereum against the dollar. Boom. Log scale. This is not how you're used to seeing it. It's sometimes quite important when you're looking at the big frames to have a look at it. That's how it looks. That's how it looks in normal scale. Let's see if we can get a little bit more of it in. That's the chart you recognize. Let's talk from here. So the big lows, the big advance to the super bull highs, that is your Fibonacci that's been thrown on here. And in actual fact, I've done a nice little drawing of this, which has been shared. So I will pop it up. Let's do a little look on this and you can see exactly what I'm talking about. So this is a non-log. This is a non-log scale. Typically when you've had such a parabolic move, you should look at the log scale, but most of the actions in the blood basement, that's right, the 23.6% Fibo level and down. That's what I'm annotating here, the red level. Okay, let's bear in mind, this was a huge parabolic, absolute screaming moon spike that took it to $1,400 when not long before it actually could have been in $2 or $3 within the same year. A lot of people were wanting to lead ICOs on the Ethereum platform, so businesses as well were driving that. Anyway, huge macro HVF setup over here, the macro hunt volatility funnel setup with overperformance in 2017. We were involved in that. It was already up at the 300s and 55 level, and that blue box right here, let's draw it, let's show you with all the little tools that we have at our disposal. We'll use transgender pink, nice big fat line. I'm talking about this spot right here. That was a key upside move that, apart from getting a nice little dip and wind up at our second interim, also then blew the target away. Hugest of its scale, first in a new trend, overperformance was ensured. We actually have a method for getting out on overperformance. You can learn about that if you want, only if you want, and you want to trade. It's not for everybody. You can lose money as well. Go click the link and hit get started. Anyway, huge push up, huge overperformance, and tapped out 1420 up top here. Then it was bear and it was bear and it was bear and it kept coming. So for those that think and are believers and are perpetual bulls on Ethereum, I want to highlight, we actually even spoke of shorting Ethereum against Bitcoin, although we preferred Ripple generally, and we were advising short Ripple against Bitcoin throughout this period. And this was Bitcoin dominance, even though they were both going down, and we shorted Bitcoin itself at the key 6,000 level that happened to coincide also with this period here, November 14th. What a great day that was for us because we were on the short side. For most other crypto traders, it sucked. Okay, so that just a little bit of history. We're not full-blown fanboys where we can see no wrong and we've bought in and we only see the good. But having been very bullish during this period with this huge super macro and upside, we pivoted bear. We actually suggested after this bounce at the funnel and it was coming back down that it would indeed break. We suggested that was a great short take. We even suggested up there was a great short take. Now the key thing you need to learn, and that goes on with crypto, is and with price behavior generally, which applied long before crypto existed. So those of you that go, yeah, you look a little bit old, this is new, it's going to be all different. Yes, it's going to be different, and in some ways it's also going to be the same. In other words, key levels of significance. That was the funnel of that huge technical, that essentially was the springboard, the compression of volatility that squeezed, that then threw the huge trajectory from 355 to 1420. Wow, what an absolute move. Of course, there was plenty technical behavior back here as well. But that was on that scale really, really vast. And it was a net accumulation. In other words, the buying was coming up under this line I've drawn here on the pullback lows. Even though Ethereum and crypto was high volatility, it was quite clear there were people that needed to accumulate Ethereum and were chasing up the dips, and then it ran. It breaks with momentum through key levels of significance. Key levels of significance. It always breaks with momentum, and that isn't support and resistance. Support and resistance is one small category of horizontal levels of significance. A Fibbo is a Fibonacci level of significance, and we are looking at the 23.6 Fibbo. So the larger category can be round numbers, Fibbos, HVF, previous major macro structures, targets, funnels. It can be normal support and resistance that many of you are familiar with. Anyway, so the key point is you broke with momentum. Note in this second orange box, so that's the big upside. That's the first big orange box with the little blue. That was your key point. We were actually accumulating and taking early entries into that. We did very, very well out of it. It was a great, great move. But we supported, we didn't do the funnel, we had a snapback rally there. The next time that you actually interacted with the funnel was actually the bear market and to break it and run to new lows. That many people never thought would happen. And down, 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 because they got so many believers, Ethereum, people were in disbelief, they were in absolute pain. And then it went from being the shining star to being, oh, such trouble. And this low over here actually is only marginally higher than that low over there. This is why I reiterated Bitcoin dominance, and we traded Bitcoin long during its period over here, where Bitcoin then ran to $14,000 and came back down. During this period, it showed to us the alts were not yet ready. They were still in the bottoming process. Note this resistance. I'm showing you resistances on the funnel here, and I'm showing you resistance on the funnel here and the fib level, the 23.6 fib. Then again, resistance on our funnel. And then we had our spiller thriller, COVID-19. It's a fake little narrative. You call it what you want. Anyway, so back down we came. So that is in essence hard down. Continuation patterns, two inverted continuation patterns, hard down. And note that continuation pattern occurred. Let's just clear the whole face on the wind-up structure to let go of the funnel. So it was high momentum into it, just ran it, wound up to let go of it, bang down, and then bang down. That actually took you to your eventual lows that this failed to take but came very close to testing. So in essence, you have this W type bottom with a little bit of a cranky of wanting to go. Whoops, COVID-19, knock back, now wanting to go. So there was a little stop, start, go there that happened. Now we said this was a very key moment, that this was probably one of the best times to buy Bitcoin when it hit that 4,000. And Ethereum, you were sub $100. I think you were in the upper 80s, 88 there around at that low over there. What a difference it is to now where it's 371, I think, in and around the 370s dollars. Note also the two fractals for downside, which we traded, and the two upside fractals. Let's do it in green. The two upside fractals now that you had. And this had us bias against Bitcoin for this upside, and again bias that we were actually preferring the alts, and we called an alt season. Did we do all this? Lots of claims, lots of claims. It's more not to ego, it's just the method. You know, recognize the power of the method. If we have a look at those YouTubes, did that happen? Bitcoin, Ethereum, and crypto will bump up next. That's what's to come. This was way down at 5,000s and 6,000s for Bitcoin. This was roughly April 2. That was highlighting Ethereum now coming to the fore. If we just go back and have a look at those vids. This was released here on the Crypto Sniper. Exactly what? We suggested they were going to keep bumping up during that period. They were suggesting it, and we gave you a setup. And then we said Ethereum will actually be stronger. We reiterated 2 months ago that you should be heavily alt long again. So what was this title? Bitcoin, gold, and silver. This was highlighting also the fact that silver was turning, and that gold and, my apologies, that Bitcoin and crypto should be accumulated at this point. And what was this video about? Part 2. That was a part 2. Then we reiterated the alts again over here. That was also still a couple of days later, 2 alts, and we prioritized. But if you watch these, Ethereum was prioritized for overperforming. Why did we say that? Because in those videos we showed you this chart. We showed you this chart. That volume's a little bit in the way. This is on a big time frame and it's Binance, so it lacks a bit of history. We're dipping down into a shorter time frame. We showed you this chart and structure and said first major structure for Ethereum to the upside against Bitcoin. Yup. And we said that 25 is a key level and you're going to let that baby go. It was a key level for an extended period, guys. It was a key level for an extended period. I can pull this line all the way through here. And if we got apart from Binance, which was a little bit of a Johnny-come-lately, we've got a bit more history on, say, Bitfinex, you would see that. Now look at this key level. Bitcoin, Ethereum, Ethereum, Bitcoin. Again, let me help you. See why there was some wisdom in this. See why there was some wisdom. Wind up structure in there. Lets it go. Down. Breaks with momentum. Little bit of a descending triangle top. Down. Little bit of a stall box. Ledge. Down. Quite flat bottoms. Coming up. Rising wedge type 3. Melt out the top. You'll learn all about the different wedge types, how we do it, and what it means, and when you're more likely. That was a warning of strength. Plus, it all formed the upside structure that you see drawn. Let's draw it nicely instead of freehand like a monkey, like that. And at this point, we were saying to all of you, way back here, Ethereum to outperform. Oh, a little alert coming up. How are you doing? Ethereum to outperform from this point on against Bitcoin. Even though we're bullish Bitcoin and crypto in the overall category as well, along with silver. So hopefully this is giving you a little bit of backstory as to why the bias is here. So this is happening. Bitcoin is easing up quite nicely, doing a pretty damn good job so far. Is it first cup gold nugget? Maybe, maybe not. Here's a couple of thoughts we'll have on that, and we'll touch on it. But let's finish here. So we're actually looking at a point where Ethereum has left the key 25 level. So let me just put that in bolder and bigger, because that was such a big level. And as I say, if you want to, you do it on your own. Go look at this interaction on this 25 level, even against in the history on Bitfinex, for example, which used to have big volume, all the way through. This was a good buy. Note over here how you had this huge descending triangle, which invariably was going to let go. We actually, as I said a number of times, said shorts against it. But first we had a snapback rally before we dip behind it. What do you end up left with over here? You ended up with a bit of a W-type bottom. But you couldn't break out. You couldn't break out yet. So you wound up instead. And now you're breaking out for that W bottom. And if you cap that W bottom, you could quite sensibly even say it's a late double bottom to get going. It needed this orange structure to wind up so that we could then go up from here into the rising wedge, melt up, make the first target, pull back after the target, reassert back up. You can see from this, you're probably going to be seeing 3.5s as a far more interesting level coming up. Again, played a significant round role. You can see it here, there with the little crayon, a little bit of resistance when you bounce there. Kind of just the tops could hold above it. You broke it with momentum, just the tops. This was the letting go of the 3.5. Little bit of tip-tap-toe at that point there. Down all the way to the 3s. Rally back up, squeezing, down first time to the 25s. Rally back up, you actually seized the 4 there and there. And longer run, we see further upside of this reversal on that W bottom. So you're getting a little bit of insight as to why we are overtly macro bullish Ethereum. So I get guys that'll say, oh, VET's done more than Ethereum, or number 99 on the shitcoin list has done more. Can you move in and out on an exchange with good liquidity? Yes, you can. Are you consistently having good days without necessarily always being first? I mean, I think Ripple's the highest today, but I mean, Ripple is a pig most of the time. If we have a look at it, where we go, highest mover is Ripple, but you got probably the second highest in the top 10 right there in liquid zone. You can go leverage long the 7% on BitMEX and get real liquidity against Tether, not against Bitcoin, because Bitcoin's also going up. It's done 3%. So you can magnify the difference of this return, not against Bitcoin, but against a fiat. How many times is Ripple top of the pops in the top 10? Very, very rarely. And it absolutely flounders. For all those who get so excited about Ripple on a single day, you always get the have-a-day heroes that just want to talk about Ripple. This is Ripple against Bitcoin. Let's just get some real context here. That is little Pippi story. Yes, it might climb quite a bit more, but it's got a lot to goddamn prove. It's really little Pippi. It could well be a bottom. Could well be a bottom. But if it's going to underperform Ethereum, why do I care? What is it? What is Ripple doing against XRP Ethereum? Let's do it for you. Binance lacks a bit of history, although it's got the volume now. So we'll just do someone that's been around a little longer. No, that's not very long at all. That's Crapola. Give me a second. Yeah, okay, we do Binance. What the hell? Still lacks a bit of history. But as you can see, it's only now waking up. Look, if it starts showing immense meta and we get upside structures, okay. Okay. But for now, it's got a lot to prove. One hammer. How many times have we had hammers? This is a deep tail hammer. Maybe it's coming back. But basically, Ripple has given ground to Ethereum from the 17th of December, the bull market high, and literally bled out. It once was 360,000. Now it's 77,000. So it gave up a huge amount. 360, 300, 250, 200, 150, 100. You're at 77. Okay, so prove a bit more before we start paying attention. Not to say it can't in the future become huge. Just technically, right now, it's got a lot to do. Okay, so what are we saying to you? So we wanted to go back to the Ethereum and we are talking about what happened last time. So I had the diagram up for you and that was actually, we went with that one because it's got more of the history for you. And the key point here is last time it broke here, it broke with momentum. When it gave way, it gave way always because it's highly significant range, the 273 to the 355, highly significant range. Listen, it's kept a lid on the goddamn thing for the better part of 2 years. You know, you broke down, you eventually gave way. It gave support over here. Eventually it gave way, broke. You needed another wind up to break entirely through it. And then you went to the new lows into here. This beginning of that process was 6th of August 18. We're in August 20. This is a 2-year-long lid. Ask me in dog years of Ethereum's life how much 2 years is, and it's half its goddamn life. Not quite, but you know what I'm getting to. It's a big damn deal. So what is actually happening is you're in the process of breaking key structural resistance that occurred as a result of the funnels, which was once serving as support. Do it in blue. And eventually relented. And initially served in huge green breakout that starts like that and ends like that. Now, I'm not saying to you we're going necessarily straight back to 2007. Everybody just wants second half 2017 all over again. Because every idiot makes money being net long with leverage, doesn't understand the system and gets washed out and destroyed on even a small pullback because they inverted pyramid their leverage, keep turning their profit into bigger size, and eventually you're going to blow up and you just have a highly adrenalized run. That's the difference between being a trained trader and investor, because you can and should do both. We have investment pot, moderate leverage, and hot pot. And the hot pot can throw gifts at you, but you got to know to take them off. You got to know when. You got to have targets. You got to have overperformance bands. You got to know how to do that. That's why hit the get started link if you think that's for you. book a call. We're going to have to close our TMPs. We've had a massive run of newbies, and possibly not too deep into August, we may actually have to say, sorry, we can't take any more people. So we want all our newbies to get up the ground, get the attention they need, and all of that. So that closeout is coming. Don't be caught by surprise, because then you won't be able to get on. There'll just be the self-study available. Anyway, enough on that. So what's the key point about this is momentum builds and then it gets decidedly strong. I want to show you something. This side, from when we broke, in other words, if I put a big ass line and say, you know, the final stages of the bear market, when you were still getting ready to make the final lows, round about there, should occur roughly when you broke to the funnel, a little bit to the left. Let me try one more time. Just can't do it. I can't draw a straight line. Okay, one more time on the gray line. There we go. I think we'll get it this time. Thank you. So that was essentially the beginning of August. If you take this bear market bottom, the bear market started up here, but the bottoming process here with this W bottom that I've already referred to, actually you're looking at the two strongest candles right now on the weekly chart. Look at these two candles. I don't know if it's going to count Sunday in them. Look at these two candles. Find me two back-to-back candles that covered that distance since this period. Nothing doing. You're looking at the two strongest back-to-back weekly candle closes on Ethereum, guys. You're looking at the two strongest back-to-back weekly closes on Ethereum for many a year. This is all little pippy. This is trying. One big candle straight away into a hanging man for a pullback. Sorry, you don't have it. In fact, if I'm to go find two candles that exceeded that, you've got your snapback rally from the initial bounce in the funnel here. You have to go right the way back to roughly April in 2018. So that's more than 2 years ago. And that was a very violent snapback rally after a brutal sell-off. A lot of what set up that snapback rally, the red is awful. We can't see that. Do it in blue. Change your color. What's wrong with you? Light blue. That's luminous enough. Those two candles, one more time, those two candles certainly exceed what we've got so far, but this was after an absolute plummet dive from 1400, such high volatility, and another dive right the way back down to 371. That was pure pain. That was extremist volatility. If I throw the volatility, the historical volatility indicator on here, guys, it's not at the same level. HV. It shouldn't be anyway. We'll soon see. Oh, and we've done it twice. Not sure we need two of you. I'm liking you. So if you have a look at this extremity of volatility here during this period, note you went really low vol just before the break. Boom, look at that break. Look at the run up in percentage. Look at that move. This is high volatility area. This was moderately high, pretty damn high, but not as high as it's been on the COVID-19 spill-off. So let's just move all those boxes. They're all in the wrong place now. Right there. COVID-19. Jeff loves that. Follow his channel. Follow Omel's channel as well. Do it. Real fundamental Ethereum fan, and has been consistently so. So you can see that, you know, this has been at very low volatility and is just starting from a very low base. So you're at the 50 levels. Look at that. You've got to go back here where it looks as flat as a goddamn pancake to find a place that was lower volatility. Then you have here, which was actually the beginning of the Bitcoin second mini bull market rally to the 14K. That Ethereum couldn't climb out the blood basement for it. That 23.6 fib was hanging tough. Then you have a small touch just for a short bit and a small touch just for a short bit. So that was roughly there. And no great shakes. This was pretty low vol over here, and you had a decent move up. So these low vol periods, once you start to be bullish, lead to runs, but you weren't done. The patterns weren't. There was a run up. There was a run up. But the pattern and the basing wasn't yet done. Now you have a pattern break. If for those of you that just don't understand the critical power of Hunt volatility funnel method, just stick then with your everyday traditional technical analysis patterns where you had a slight complexity to your W bottom. You're there. There's your W bottom. It wants to be. That line wants to be this. That line wants to be this in simplicity sense. Yes, our FBTCs are running and setting off alerts. Man, oh man. And that'll be to the upside of Ethereum against Bitcoin. And Bitcoin's good. We aren't anti-Bitcoin. We just asserted Bitcoin dominance for 2 damn years over the other coins and said you can short. The best trade was shorting Ripple against Bitcoin. Then you are crypto neutral. And we even took occasional shorts on Ethereum during the bear market, despite also trading it long here. This is not marrying. This is recognizing. Now, for your hodl pot, for those of you who say, oh, I can't do that, I love Ethereum. Okay, you have your investment hodl pot. I love silver and gold too. I think it's real money. I kept accumulating silver when trading it short when it was in a bearish stage. So your investment pot can continue to grow. And then you get rewarded when you have the major moves. You must have your slow dough, your medium dough, and your fast dough. And you must always tax down. Down, down, okay? You're filling up the top champagne glass and it goes all to all the others. Trickle down theory, isn't that cute? It doesn't work so well when the control structure's in charge. Anyway, so this is critical. This, guys, is getting impulsive. Now you're going to ask me, what do I make of that? I think it gets more impulsive first. It wasn't on the first breakout candle that it was at its biggest. It wasn't at the second candle that it was biggest. Yes, it might have a small pullback. Look, 1, 2, 3, 4, 5 candle. How about that? Would you fancy being in that? Now, I'm not saying it's going to do the same. I'm just showing you the nature of core breakouts. This is a W bottom breakout. This is a breakout of the 23.6% Fibbo. This is a breakout over a dominant legacy Hunt volatility funnel that literally defined the entire bull market of Ethereum once you were above $100. Once you got above here, this was the dominant pattern of history that set up that outcome. That's it. And you just broken it. And I'm telling you, you know nothing about my theory. You're free view. You're picking up little bits and pieces. You've barely got 15% if you've got 5%. But I can say to you, take it from me, it's highly powerful and significant that you're breaking through this. And that the volatility actually, historical, for this time frame under review weekly, is still in Pippi land. It can go a lot bigger. It can go a lot bigger. Yes? It can go big Pippi. Wouldn't you all love a little bit of that in this great transgender world of ours? Imagine it goes to 200, which would be the beating of this. Where do you think it ends up? It's got a whole bunch higher than where it made in its last high. Let's say it does a moderate high and goes just to here. Let me tell you, it'll be a lot further than it did last time it went that way. A lot further, because this has triggered a pattern. Look at the size of candles you're getting that you weren't able to generate then, because you were still being crushed. Volume was still going down. This was your eventual low on volume. We've started to pick up. Then we had our COVID-19. And then we had that little bit of an outlier that they try to kill and put fear in it. So let me say another key thing to you on price behavior. The most amazing thing is just before some of the biggest moves in Ethereum, if you're new to crypto and trading, and I was trading it in 16, 17, wasn't the earliest first bird worm in this game. But what I can tell you that occurs in traditional markets and certainly occurred even more so, to my great surprise, in crypto, is that before you get a big move up, you get a shakeout trade in the opposite direction, a big move down. A couple of times, when Ethereum was about $80, and I saw it in an amazing structure set up, and I thought, wow, that would mean it's going to have to go over 160 plus, and it had just touched 80, and then you had a bedwet moment that on one or two exchanges it traded into single digits. They did a dump, flushed a lot of stops out, took a lot of people out. You can conspiracy theory this, you can do what you want with it. I'm telling you, it's common in technical analysis and in markets. Flush the weekends out with a look one way. COVID-19 was that flush point, guys. That right there, that was your flush point. I'm warning you, it took a lot of people out and hurt them. And then they got out butt hurt and they forget to get back in because it's too many goddamn bloody beatings. I'm saying to you, the bull market is back. I said to you 2 months ago, the alt market is back. I said to you 4 months ago, it's time for you to be accumulating Bitcoin and Ethereum, and that Ethereum is going to overperform Bitcoin. These are facts. It's in the YouTubes. Watch them. They're all there. None of them get deleted, including the things I say that might not be right. And I'm not 100% accurate. The method is powerful. I'm just an operator of the method. You can be that guy too, but you need to learn and understand it. So this high volatility, it's not even started. It has not even started in comparison to the history it's had. Even if you take this as an exception and you say, my God, come on, mate, a run up to 1100, it was so exceptional. You know, we're never going to see that kind of move again. Come on, you know, take this whole thing out of the game. Okay. Let's take it out the game. What about that? What about this? What about these levels? You're nowhere near there yet. We're still nowhere near those levels. Look where you are now. Look where you are now. Are you going to be upset if it goes to 589 again, the previous target of our last move, and your historical volatility index creeps up? Because it never goes up straight line to around here and then eases a bit. Where do you think this is going to be? Not perhaps there already, at least? Who knows? Who knows? This is, of the majors, it's not sexy. It's not like saying, oh, VET. I just had a guy on Twitter throw it out at me. Oh, VET's overperforming. Of course you'll find one overperforming. I'm choosing you the second biggest goddamn coin. Shitcoin with zero market cap going up to 100 million market cap is going to overperform. Good luck getting 10 BTC out. Good luck finding lots of exchanges where you can trade it. Good luck getting any form of leverage against a fiat on it or a derived market. Good luck with a lot of things. Good luck with how you get out. And good luck when it gets plunged back down by the insiders dumping on you. You know, and I'm not saying that's going to happen with VET. I actually think there's going to be a bull market and there's going to be some new coins that truly, truly run. But for those that shout about VET ETH, do you want to be long VET and not ETH now? You listed, you've had a run, and now you're getting thrown down against Ethereum. I don't need too much crazy non-pattern based volatility. That's not a chart that excites me. That is high volatility and lack of real safety in that. So you don't have to be. Everybody, new traders all want to trade penny stocks. I want to buy a 2p stock and watch it go to 5p and I'll 2.5x my money. Oh, I want to buy a 1 cent or a 10 cent stock, a major recovery. They never recover. The 2p's never come back. I tried it. I started in the same place. I warn you, buy strength. Buy strength. Look at, and I hate to say it because I hate them all, but Amazon, Netflix, Google. There wasn't a bad time to buy them 5 years ago compared to where they are today. They're the majors. They're going to win this game. So go chase your PP shitcoins, but not with my blessing. So anyway, non-advisory, that's my take. I'm leaving it with you as I'm giving it to you. So very strong, the Ethereum, and a strong the Ethereum BTC. So we've got a little bit of an alert pop. Also, look at this for increasing in volume coming in here. Look how many green candle days we've had, days, weeks, of the last number of weeks against Bitcoin. Take it from this RL2 low. 1, 2, 3, 4, 5, 6, 7, 8 weeks. 8 out of 11 are up days, are up weeks. 8 out of 11. It's powerful, strong, good little structure. Further upside, overperformance expected. We have overperformance bands. We know how to manage that. You want to find out how you can jump in and invest in your learning. You got to show you really want it. And seats are now going to be restricted because we just had so many guys come in. What with the oil trade calling single digits and that huge collapse. Short PAA, short oil services, short oil pipelines, short the oil. What with calling the old time incorrectly, calling the Bitcoin correctly, calling silver and gold correctly. We are making proper money. The hot pots on my traditional trading and my MEX are singing on my higher volume. They've absolutely sung. Crazy, crazy potential. But I'm not selling sizzle to you. I don't want you to come there for sizzle. And don't come just for trade alerts. Come to learn and grow if you are up for it and want that. Because you can't, your wealth can only go up as far as your own mentality and growth in wealth understanding goes up. You give $10 million to a moron and he builds an MX track in the back of his garden and snorts coke and hires hookers every Saturday night and is bankrupt in 3 years' time. Okay, so understand that. And I'm not calling you that guy, and I'm not saying you're going to get given that kind of money. You've got to grow and learn and build money management, and you've got to understand some of the principles I'm trying to pass on to you. Okay, so this is Crypto Sniper. I'm signing out. All the links are below. You don't have a red penny to your name, grab the free mini series. On us, no problem. Fill it in. You'll get a video every time. Start stacking a Satoshi at a time. Start stacking a silver ounce at a time. The great fiat game is unraveling. If you are crypto alert, there will be great opportunities. But how you maximize them will be absolutely polarizing between the smart and the skilled and the footloose and fancy free that will blow themselves up on leverage and end up with nothing in a bull market. Trust me, countless times. I've seen it in my early days. I did it and proved it to myself a few times. Okay, that's it. So endeth the epistle from the preacher of crypto benevolence. Enjoy yourselves, enjoy your weekends. Give us this a share, give us a like. It's totally free. There's no ads on this channel. We don't do it. We don't need it. We don't want them. They'd probably have sacked my channel by now if I was monetizing it. I'm delighted still to be around. Okay, good. Catch you later and enjoy, enjoy, enjoy. Bye for now.